Hey everyone, this is Frank with your Pivot Boss closing report for January 27th, 2016. Here's a daily look at the ES in that daily time frame, and all we're seeing right now is rejections. So we've gotten pretty heavy here where prices have tried to chug higher, have stayed above our buy zone down here and have maintained above the CLVN and are trying to chug higher, but it's just not happening right now. And because it's gotten so heavy, you may need to see this thing auction lower back into 1811 perhaps, or perhaps even lower before this thing sees a better auction. But right now, this thing has gotten very, very bearish, especially after the FOMC this afternoon. And all we've seen right now is a rejection of the highs at above the previous week's high of 1907 half. And that's the highest point we've seen all week. So we've seen a solid move here on the way up. We reached our highs, the highest high points here that we've seen within this move just today, but failing to hold above 1879 yet again here implies that this thing could see another auction lower. Now, I still believe that as long as 1846 remains intact here, we're going to see more strength, but I wouldn't be holding any positions in this. I'd be looking to establish a new position at a better level here. Or look for a confirmed pullback once we do get a push higher. But this CLVN offers a much better trade location. Failure to hold that level would then target 1811 right here, and the next level down, which is going to be in the 1700s, which is 1746. That's a significant LVN right there. I would expect if that LVN to be tested to be a first test buy opportunity. All right, let's drop down into the lower time frame here of the ES. Bringing up this chart here, one thing that you may want to do is actually mark when the FOMC statement came out. What price was at right at 1 p.m. Central? And according to my data, I have 1903.75. I marked that as a time, and then you can see right here 1301, which is right at 1300 basically. It's 1 minute ahead here if you're in the 1 minute time frame, but that's the actual timestamp of the FOMC on January 27th. And that pinpoint right there is going to be a key level now. It's going to serve as a key level like any of the LVNs I put up or any of the price-based key levels I put up. That is now a key level. And you can see right when that FOMC came out, everything sold off significantly. So up until that point, our idea that price was headed toward 1921 basically came within 11 points of fulfilling that first target. And then the FOMC statement came out, and boom, this thing sold off significantly back to value and was bid off of value. So that's a short-term bullish statement right there. You see MCVPOC right here, and you can see right there that is 1865. So on that first test, we've seen buyers come in and defend, and then we're seeing a retest of levels on a pullback here that actually coincide with 5-day value. So prices below 5-day value right now being defended as we head into the day's close, and that could lead to a move back toward 1890 5-day VPOC. But right now, overall, again, if prices can't hold above 1879s, that's a suggestion that we're headed much lower. Okay, let's take a look at crude oil. Here's crude oil in a daily time frame. We've been trending lower this entire time. Obviously, the pattern here has been high range days, but trading within an overall range here. So not really going anywhere. New highs being offered, new lows being offered on the day. You can see that price continues to hold above 3014, which is the 100% expansion target from that earlier range that we broke out of to begin the end of the year there. And what has been so important about this range here is that we've been in a downtrending market, stacked and sloped here, but prices have just kind of sat here. They haven't rejected, but they haven't pushed forward. They just sat there. And, you know, right there, it's building energy. It's building energy. So this is 4 sessions back and forth where this thing has just done this, churning. And what that's doing is it's building up energy there where we could see expansion from this range in either direction that could be rather significant. It appears that this thing is kind of coiling like this here, and eventually this range above 3303 or below 29s here could spark some significant movement, multi-day movement that could be somewhere to the tune of about, I would say, 5.5 points. So if we get above 38s, 33s, then I would say that a move into 37.81 and 38 half would be about the spot you would target if we break this thing to the upside. And then you would obviously below 30s here, you're looking at a move into about 24 half. So or below 29s rather, you'd be looking at a move into about 24 half. So it could be significant here how this thing plays out. I'm not, directionally we've been down and we've been seeing rejections above the previous week's high. But that just tells you what we already know, which is responsive bears are defending there, but that doesn't mean they are winning this battle. So they could get their stops run still, and that could fuel a nice move up, especially if price pushes back above 33. So right now, slight downside edge here, but be aware that a breakout either way from this range, 33 to 29, sparks the next 5.5 point move. Okay, in the lower time frame for crude oil, basically prices continued higher and reached new highs here beyond the previous 100% expansion range from that impulse range that we were talking about. Well, price failed to hold above that zone, and that led to a move into the previous session's RTH close, and from there that was bid back up and where we currently sit. So right now, 32.41, or rather 32.46, somewhere around there, and then 31.40. That 1 point range right there basically is the range to watch for the upcoming RTH session and overnight trade. Failure to hold above this level opens up a move back into 30, and then holding this level would suggest a retest of prices back above 32.41, which could lead to more expansion ahead. So that's the key range to watch in overnight trading. Briefly with the gold contract here, we saw a completion of the move into our key targets. This is something we've been talking about for a while now. To begin the year, basically, we've been on this move, and we were looking for a move into 11.23 and I believe 11.30 here, which is the monthly target right here. So 11.30. So we've reached the 11.23 full on, and now we've gotten to the 25% expansion portion of the new key range. This is the key range we talked about and developed during the premium trading room here, and this is the newest key range that we're basing some of our movement off of. So we have 10.56 half up to 11.13.10. We've squeezed and held above that zone here. That would suggest a completion of the move into 11.41 and 11.69.70. That's the 100% range expansion target from this impulse move right here, 11.69.70. Now, if you back this thing out into a wider time frame, the top of this impulse range is 11.69.70. So they line up perfectly there with that key range confluence. You also have this move here. When price held above the zone and failed to hold, that's when I said a failure to hold above this zone implies a move back to here. So this key range right here has been money, and right now we've been playing off of that range. So the fact that this impulse range here forecasts this level, which also coincides with this level, creates kind of a magnet effect. So we have a high confluent zone here perhaps to play to if this thing can continue to squeeze as we've been watching. Now anytime you see a level of squeeze like this, we could see another push higher, but eventually we'll likely see some kind of pullback, and it'll try to seal this 11.13 and then pulling back into this zone where this LVN is developing. That offers another shot to get back into this move and slingshot this thing higher. Okay, looking at the NQ now. Here's the NQ. This one finally gave up. We talked about how this thing had been getting heavy here. It had been attempting to hold. We've seen nice defenses of all the pullbacks here, and that's been good. We even closed above 41.74 the previous session, but this has been all offered after failing to see acceptance here at this LVN 42.26, which, as we know, is the midpoint of that August range. So that's an important key level here, and to fail to hold and bounce off this zone implies that we could be looking at a major test at this CLVN ahead with a shot to see new lows if that thing doesn't hold. So right now, the only thing holding between this and new lows is that CLVN at 40.72. because that level has not been tested, and because up to this point, this thing has still been bullish above our rejection tail here, I would say that a first test buy opportunity off 40.72 is a good idea. You're likely to get some sort of 3 to 5 handle bounce off that zone at the very least, and that can get you scaled out of that trade to mitigate risk, and from there you can allow that trade to work its way out, because this is a significant COVN. We've seen how prices have rejected here, and just above it. I would say that if prices come into this level, that warrants a buy opportunity for a push higher. But as soon as prices can't hold above 40.72, this thing is headed to new lows, and we have downside targets to play to at 39.62 and 38.93 half. So those are the next two important targets to play to on the downside. All right, dropping into the intraday time frame right quick. What you see here is that we have, boom, the 0127, that's January 27th, right at 10 o'clock FOMC. Basically, that's the timestamp there. We also have the Fed tag right there, January 27th, which comes in at 41.9675. So that's the key level. That's the key level right there, right when the Fed came out, and it's been all offered since then. So right now, that's an important level. And right now, that's the pivot. And since we're below that pivot, things look pretty weak right now. So 40.72 is the last line of defense. Below that level, you're likely selling pullbacks for a major push lower. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week. Good luck and trade well.